So please, if let's talk about I will want you to focus your mind, forget about your old system or whatever strategy you get. Open your mind fresh to a new idea. Be open-minded. Be open-minded. Don't criticize negatively. Be open-minded first. If there's anything you want to ask, be open-minded. Be open-minded. So you go through you've watched the video on YouTube about the introduction. You are not need to say S&R. S&R is simply a resistance and support level. You've gone through it on YouTube. You are not new anymore. So what we did yesterday was just to introduce, how to build a storyline that is strong. How to build a storyline that is strong, taking it from the multi-time frame levels. Then we touch on roadblocks, obstacles, how to identify roadblocks and obstacles, then time frame combinations. How do you combine your time? How do you set up your confirmation? So those are the areas we're going to talk about. That we're going to talk about today. So there's no need to go to the introduction anymore because of time. So I will now I will introduce you to the let's see what we have here. Multi-time frame. Please record you. I want to share again. Please record. You better be in class. Share record. So let's go straight to multi-time frame. These are trend lines. Yeah. So this is a multi-time frame analysis. It's all about how to build a storyline. What is storyline? Storyline is simply the direction of market movement. Because we said that every time frame has its own storyline, level by level. Every time frame has its own storyline to build. You must listen to the storyline. You must listen to the story. Each movement in the market has an in-depth story that you must find out where this market is going. Where is it? If you see a tap on a level, you must go back to where that tap is coming from. If you see a rejection on a particular S&R level, you must go back from weekly, daily, 4 hours. If you don't get it on weekly, you go down to daily. If you still don't find it in daily, you go to 4 hours. There must be reason why that rejection comes up. Price action is not a random thing. It's not a random thing. It has a cause. There must be something that is responsible why price reacts the way it reacts. It's not at random. It's not moving at random. There must be reason for it. So that reason can best be known when you shift your mind from one time frame to the other. So that is what we call multi-time frame analysis. Multi is more than one. Time is dimension, the trend. Then frame is simply the border. That's the limitation, the frame, upper and lower level. You must identify the upper and lower level of each time frame, especially the higher time frame. For monthly, you can ignore monthly because monthly is not that, consistent. We have monthly cycle though. We have monthly cycle. Like for now, gold is falling. On July, gold will rise. That has been yearly. It has been consistent like that with gold alone. Gold alone has its own yearly cycle. It has its own monthly cycle. It has its own weekly cycle. You must understand that trend. You must understand the trend so that when you wanted to trade, which phase you are will determine the direction of that phase. You know, when you want to trade, if the new one like today now, we have a first in the first edition now, I believe gold will start rallying upward because it's pursuing what we call the end of the year phase. That's another subject on its own. That's another subject. You must understand the phases of the market, especially on gold. Gold has a cycle. It has a cycle, 4 cycles or thereabouts every year. You must understand the trend, that trend. So I use that trend to trade gold, especially gold. You can be buying gold even offline, physical gold, using these phases. That's another subject on its own. So when you understand the phases of the market, when you understand the multi-time frame levels analysis, then you'll be able to know where you want to fall in. You'll be able to know where to shift your stop loss and manage your position, especially if you are the positional trader or swing traders. But for intraday traders, you use the roadblock within a higher time frame to enter your trade, and you use the higher time frame next roadblock or high and rate to do what? To take profits. That's for scalper. If you are a scalper, intraday traders, you use the roadblock within a higher time frame to determine, you know, your take profit, to determine your position. So where you are going to adjust your level so that it will not sweep, the market will not sweep you out. Yes. So you must understand every market time frame has its own phases. It has its own cycle. You must understand it. Like for example, if you have a weekly cycle like this, if Monday starts from the high, if Monday starts the high, so it will be coming down. It will be coming down to Friday to create a low on Friday. But mind you, we have a midweek reversal that will reverse this thing on Wednesday or Thursday thereabout to take out this high and then continue lower to Friday low. That is the weekly cycle of gold, especially gold. Is very consistent. It's very consistent on gold. So if you open a market opens on Monday, it has taken out the low of Friday. That means that is the low. That is the low which is going to start from the new week on Monday. Then you see market moving up after taking the low of Friday to Tuesday. Then Tuesday we create a kind of high from Monday to Tuesday. Then Wednesday will come in to take it out, to take the high of that place, then take it down to create a kind of a reversal. Then it will now start going to Friday high to create the high. That is how market moves. That is how weekly cycles is being created. We have a monthly cycle, we have a weekly cycle, we have a yearly cycle. If July is rally, August must be down. God has been maintaining that cycle for 100 years past. It has been maintaining that cycle. Go and watch your charts. So you must understand this storyline behind every time frame. You must understand the phases. Now, what we want to use that knowledge in this scenario is that for a higher time frame, storyline, I told you must have what? You must have a lower time frame swing, pullbacks. If this is your monthly, if this is your monthly cycle like this, if this is your monthly SNR, right? That means the weekly has touched the resistance level, right? So that means on daily, you must have gotten something like this on daily. You must have gotten something like this. You must have gotten something like this on daily. You must have gotten something like this on daily. Sorry, on weekly, I mean, sorry, weekly. Weekly must have got, you must have gotten something like this. So that means this monthly, yeah, you are using as your DC. Within that monthly, we have the roadblocks. What is the roadblock? Roadblocks are just these pullbacks. This pullback here. They are roadblocks. They are roadblocks to the monthly time frame. They are roadblocks. This place is a roadblock because our price is coming down. It's looking either to take it out or to bounce off that level. So they serve as roadblocks for this monthly cycle. The same thing on weekly cycles, there are daily roadblocks that you must look to. There are daily roadblocks that you must look to, because all these pullbacks we cause market to react, price to react. Price must react at each level of this pullbacks. Market must react. Market must react. Market must react. Market must react at this level of this pullback. So this will be daily time frame, right? Under weekly. Please listen to what I'm just showing you a first-hand information now that's supposed to be for VIP. And so I'm just trashing part of it to you now. You must be attentive. So you use this daily now to set your take profit and new entry. You use it to see where you are going to enter. When price break out of this place, it's going to return back. You know, feeling like it's going to return back inside this zone. Inside this zone. So that you are using this zone now to do what? To enter a new trade. Then the breakout will be for what? The breakout will be for price to go to a new level. A new level. Because until when this daily time frame, until when it has come to the next level of S&R, until when it has come to this next level of S&R, the storyline of daily will not be completed. The storyline of daily will not be completed until when this daily weekly cycle has been reached. Price will travel from a fresh level to another fresh level. Price will travel from one fresh level to another fresh level. That is the system. That is the basic thing. Fresh levels are more significant than unfresh because liquidity has never been taken off them. They are still fresh. You know, I told you in the beginning of this, in the introduction of S&R, that S&R is simply price manipulation. There's nothing new to it. The Malaysians are just trying to customize it to their own. It's the same thing as price manipulation. There's nothing new. They just redefine it. Instead of where we use the conventional way of trading the weak low and the weak high. They focus on what? They focus on the body close, not the weak. But we have been focusing on the weak, and we see price try to swing us out. So that price will not go to the end of the week. It will now, from the body to now pull upward. Not knowing that the body, where the body closes and another one open, has created what we call an equilibrium. So you must understand that price, the market makers are their business is to do what? Is to take off liquidity of resistance and support. Once a fresh level has been tapped, the next target will be what? The next target will be another fresh level. They are looking for another fresh level to tap because that is where the pool of liquidity relies. So if this fresh level has been taken out now, that means price is looking for what? It's looking to a fresh level in the past that has not been tapped. that has not been tapped, a fresh level in the past that has not been tapped, either in monthly or in another past movement that has created this fresh level. So when you see price react at every area of its movement, I told you something must happen in the past that is causing this reaction. So that's why some people, well, when you enter your trade, immediately it take you up. You are being frustrated. You enter again. You can imagine, because you did not understand that every time frame has a price react, where price reacts. Every time frame has a storyline. You do not understand the storyline behind each time frame. So with this knowledge, you'll be able to use it to know where there's going to be a possible reaction, so that you know how to take decision, whether to remain in the market or to go out. So that is the basic fact about price movement. So your storyline determines the direction of where the market is going. If I told you that if the market has created an SNR in the monthly this thing, that means if you go to your weekly, you must have gotten a breakout like this. This is a breakout. You must have gotten a breakout like this, so that you don't trade. You don't trade when market breaks out like this. Are you going to trade? You don't trade, because it will pull back. It has taken a fresh level here. We have less than 10 minutes to go, so we'll come back again, because 45 minutes is about to reach. So now, when this fresh level have been taken out, you know our normal SMC price must go back to a zone, a particular strong high to sell from. It will take out another level, go back, pull back, break of market structure, or whatever they call it in ICT's concept. So the Malaysians do not even care about that. They knew that once price take out a level, the next target will be what? The next target is to go back to inside the zone. Is to go back to inside that zone and take and look for to break another level. So that is that for this. Now, if you are a scalper, you'll be able to use this information now to know where you're going to do your where you're going to do your setup. Are you going to do 4 hours? Because what they taught us is that you must start your setup from 4 hours and above, not 4 hours, not anything below 4 hours. You only use 1 hour, because 1 hour is an extra day, right? You only use 1 hour to know the direction of weekly cycle. You only use 1 hour, but you don't use 1 hour for your storyline stuff. You start from weekly, then from weekly you go down to daily, from daily you go down to 4 hours. It is now for you to use either 30 minutes or 15 minutes according to your own distance, to use that for your entry or setup confirmation. When we the manual, we see that as when I put as a 2-time confirmation rule. When you have seen once you have seen a kind of SNR in higher time frame like this, once you get another time frame like this, that means you want to see a price retest of it with a pin bar in other 4 hours. If this setup happens in daily, that means you want to see a pin bar or thereabout in 4 hours. Then you can go to your 1 hour or 30 minutes to get a breakout. When you do your refinement, you get a breakout. Then from the breakout, you enter your trade at a pullback. At a pullback like this, at a pullback like this, you enter your trade. That's what you want to see. Please reserve your question to the end of this. We'll go for a break. We'll go for a break. Then we'll come back again for another session. So that's just the introduction to storyline. Every time you come into the market, note that in your hand, man, that you must you must do what? You must identify the very first task for you is to do what? Is to locate the fresh levels. You mark them out. Once the market make a level, you mark them out. That is your duty. You mark them out, fresh levels. You mark them out. So depending on the time frame you are using for your setup, for your analysis, for your storyline, mark out your worth, your fresh level first. Mark out your fresh level first because they are more significant to market. Then once you mark out the first level, you go to your DC. You go to on fresh one within this boundary. If this is the upper boundary for that time frame, if this is the upper boundary and price has touched this place with an S and now it has taken out a kind of a DC in that place, then that means it's coming down to the external range. You know, we have the external range, we have the internal range. So the pullbacks within this range is what we call the internal range. Then the external range at the outside the boundary. This is the low and the high. So if the market has go to the high, then that means the next step will be what it will be facing to take liquidity on the external range. But until when the internal this thing has been taken out, the roadblocks has been taken out, market will not come here directly. It will not come here directly from here. It will not come here directly. It must therefore take out the internal lower time frame. This is created by lower time frame. The internal range created by lower time frame. So let's go to this here. See gold. Let's turn to gold. But we are about less than 4 minutes ago. If you can see through this thing. So when we come back, we'll do trade and we'll use gold to do this weekly review for what will happen from tomorrow. Let me change it. This is NASDAQ 100 US stock indices. Let me change this to gold. Yeah, this is good. Gold has been fantastic. If you trade gold, I told you gold will still be selling. Last is 2 weeks ago. I've been telling you this, that when I got to this place, this is weekly time frame. When I got to this place, I say, when this place has been tapped into this, nothing will cause gold not to come down. Can you see this? So before you get to this place, you must have done what? You must have done your DC. Once you get to this place, this is a good setup for you. This will have been a good setup for you. This will have been a good setup for you. This is a fresh level, right? You will have marked this place out as a fresh level. Then you mark this place out, the lower, the previous as a fresh level. This is a fresh level. This is fresh level. Can you see it? This is fresh level. This is fresh level. 3. This is if this is the current market, right? If this is current market, this is how you mark it out. You must have marked it out. Then there's another thing. Oh God, that is what we call multi S and R. You see this place, very strong. When you see, it's what we call a convergence. When you see two S and R's, this is gap, this is worth, this is a classical. We call it a multi S and R level. The Malaysia did not mention this. I will just because of experience. It's from my own experience. Glory be to God. Let me not take the glory. Glory be to God. It's my own experience. I detect this. That whenever there's a congestion of multiple levels converging at the same level, it's a strong area. You make that level to become very strong. So when price tap into it, beware. If you are trading, beware of that level. Beware of that level. We see multiple of it. Yeah, like what happened here in the past. See this place. This is at multiple levels, and that is why this thing comes down. multi SNR levels. That's what we call multi SNR levels. I have to be fair to my I have to be very, very fair to my executive VIPs, because most of the information I'm telling you, I'm giving you guys here are discrete. Yeah, are discrete. It's from a well-researched information knowledge of price. So when you see this place here, like what we have here in the past, you see this market pull into it. It does not come down because of what? Because we have a congestion here. Congestion. When you get a congestion, multi SNR. Can you see this? Can you see? You must identify those levels. They fall in the same area, and price came in, tap into it, withdraws back. You must pay attention to it. You must pay attention to it. So the same thing will happen here now. We are less than 1 minute. Please, we'll come back. I will put up the new link. You see withdraw. Once you get this, and price close below it, it does not close above. Price close below it. Just ready your market. Sharp. Ready your market. Ready your market that you are going to trade in a swing way. Ready your market fast. Because price is going to pull. Your target will be the next level of this outer boundary. Oh, sorry. I want to see the range.